welcome back. Well, besides the market, it's the oil prices that are really in focus. There the trade is quite volatile, actually, ahead of the closely watched OPEC meeting that's underway. The cartel, along with Russia and other allies, will meet in Vienna later this afternoon to discuss cutting the output to actually help shore up the prices and curb the excess supply. Manisha Gupta joins in to give us a lowdown on what we can expect. Manisha.
Well, yes, we have seen a bit of a recovery in metals, but not so much. And this year clearly is closing negative for all of those metals there. The last month or so actually has been even worse when you look at the price movement for many of them. So today, copper on your screens, 0.5% down. That's a one-week lows continuing for that one. We also have seen sharp declines for nickel and zinc prices on Shanghai, LME, and of course the Indian markets as well. It really has been about the Chinese yuan declining versus the US dollar for a second straight session today. And it also has been about the kind of statements that we have seen post G20 coming from China and US, which clearly don't match, because US clearly says that it is going to be either a real deal or no deal with China. And this is even as the 90-day truce period is on, between which there would be no additional tariffs. But there is a lot of uncertainty right now. The shipments haven't yet started, whether there was going to be a repayment on the kind of tariffs that are being charged right now. So there is a lot of uncertainty, not too much of a clarity. And that is the reason you have seen the metal prices decline quite sharply yet again in the trade today.
Okay, that's Manisha talking about what's happening as far as commodities and metals go. But the big talking point, of course, is the OPEC meet later today. And here is some opinion which we are going to play out for you on the OPEC meet and what to expect.
Whilst oil markets were very finely balanced, literally a few months ago, policy-led increase in production from three major producers, US, Russia, and Saudi Arabia, has just taken the supply above the demand now. And now, basically, this is the excess that we have in the market, and we will keep going down if OPEC does nothing.
There is concern in the market out there that, President Trump is going to lean very heavily on the Saudis to do nothing. But frankly, I think it's in the Saudis' own domestic interest to pull these barrels. I mean, they essentially oversupplied the market over the summer, and now I think they're going to have to pull those barrels back. A million is essentially where we're going to start from in terms of a cut. I think the question is, do we get up to potentially 1.5 or higher? But I mean, my base case is they pull this thing back by a million.
If there is no cut at all in the meeting today and tomorrow, then I think there's a lot of room for the crude prices to fall even further. I mean, I don't know how much more they will fall, but, the market right now is quite oversupplied, and the market is already expecting that OPEC and allies will cut at least 1 million barrels per day. So if it comes out that they don't cut anything, or if they cut less than that, I think this will put a lot of pressure on crude prices.
All right, and let's focus on the market, actually. And today, of course, is a day of significant weakness, not just for our own market, but globally as well. Veteran investor Ramesh Damani spoke to us earlier this morning, and he says that buying the dips looks to be a better strategy than selling the rally.
The underlying tone must be bullish, because this country is giving us such great opportunities. The index has gone from 800 to 36,000 during the last 30 years. So the opportunities to make money, to be a great entrepreneur, to contribute to society has been so enormous. And I think we should not lose the trees for the forest. So I would not be particularly wary of this bull market ending. I would say that buy the dips is a better strategy than sell the rallies. All great businesses, all great investments boil down to the same thing, that you want to buy things cheap and you want to buy things which are run by people of integrity. A great business bought cheap is probably the best investment advice that I can still give. It has worked like a charm. And you really don't need to do much else. There have been disappointments on the way, but that's just a part of the investing game. I think the market's fear of election uncertainty are perhaps overplaced. I think there's a good chance that the state elections might disappoint the market, but I think the people will vote differently between the state election and the national election due in 2019. And I think the market will overcome those sort of fears. Quick service restaurants will, be probably a good place to go. Some of the stocks are still fairly cheaply valued, in a manner of speaking, compared to the potential, not necessarily on earnings basis. So that looks good. A little bit of the, alcohol, because human habits don't change. the sin stocks will probably do well. The gaming stocks, I think increasingly this will become a very important gaming market in India in terms of casino. Across Asia is a jewel, right? Starting from Japan, Singapore, Malaysia, Philippines. You have gaming everywhere. So if you want to be a part of the MICE market, you'll almost have to introduce gaming. So, we're fairly optimistic. I think there are a couple of companies with early leadership in that sector. So that'll do well.
All right, on that note, let's take a very quick break, come back in just a bit, and lots more to focus on the market. Stay tuned.